My name is Shil Timikole. I'm the managing partner of Pavestones Legal, and I'll be moderating this session. Thank you for joining our session titled Financial Technology Transitions, Regulating Innovation. This session is particularly exciting to me, and I'm sure to any of you interested in technology and the growth of technology in Nigeria. It's exciting because we have key players in the tech space sitting here, people who can influence the fintech sector and positively impact. We have here Mr. Kofo Salam Alada, Director Legal Services, Central Bank of Nigeria. You're welcome. We have Mr. Reginald Karawusa, Commissioner, Legal and Enforcement, Securities and Exchange Commission. You're very welcome. We have Mr. Felix C. Obiamadu, Director, Legal and Sanctions, Nigerian Financial Intelligence Unit. You're welcome. And we have our very able representative of the operators, the fintech side, Mrs. Adedolapo Akinolu, Head of Legal Kuda Bank. Happy to have you here. I'm going to let my panelists say a little bit more about themselves, but first, let me just give you a little background. Now, over the years, since the whole startup culture came about, we've watched this quiet tussle between the fintechs and the regulators. The fintechs are trying to push past barriers, innovate, do things differently. They're coming up with innovative services like digital banking, mobile money, use of cryptocurrency to solve exchange problems, open banking, amongst others. And then our regulators, quite rightly, are trying to ensure they work within the confines of regulation, so there isn't any abuse. At this point, I would love to I'd really like to commend our SEC, CBN, NFIU, everyone in the fintech space, because they are regulators who have actually tried to develop tailored regulations for fintechs, for startups, and they're doing it much better. Okay, let me not say much better, the other regulators don't hear me, but they are doing a good job developing tailored regulations. So it's commendable. However, we're hearing this quiet shouts from fintechs, and they're saying they're being stifled, they're over-regulated. It's quietly there, and our regulators are saying, we're creating an enabling environment for you. We're trying to help you. So my first question is to Mr. Kofo Alada. And my question is, what is really the mindset of CBN towards fintech? And you can first introduce yourself a bit more in 1 minute and then tell us.
Thank you, moderator. Thank you, learned friend and ladies and gentlemen, those here and those watching online. My name is Kuda Salam Alada. I am Director Legal Services, Central Bank of Nigeria. In that capacity, I carry out general legal advisory services. But before now, I've been involved in quite a number of views relevant to payment system. I once headed the legal special interest working group developing most of the regulations on payment system in Nigeria under the Payment Vision 2020. Having said that, well, you've asked what's the bank's mind about fintechs. I'll tell you that, well, we all know that fintech just new is also an innovation in itself. However, it is not just fintech, it's just also a company that seeks to play in the financial ecosphere. And the regulator, as you know, is a creation of the law. It has its mandate set out in the enabling law. And central bank, as you know, is a baby of the CBN Act 2007 and also uses other laws, especially the Banks and Other Financial Institutions Act. And since November 2020, with the new BOFIA, fintechs have now been brought within this ecosystem expressly under the law and is recognized as other financial institutions. For Central Bank of Nigeria, whose mandate is for monetary and price stability. Also, the mandate includes ensuring sound financial system in Nigeria. And who are the players in the financial system? Banks and other financial institutions, which now includes the fintech. It is of interest to us. So we need the fintech as medium of financial transmission mechanism, for monetary policy development and achieving our mandate for ensuring stability, price stability in Nigeria. So we are interested in what they do. And maybe you want to just hear about the manifestation of our interest in fintech. Who else will be more interested? For somebody you want to use as a transmission mechanism, or somebody you want to see carry out your financial inclusion mandate, for somebody you want to use to ensure that the system is calm when you want it calm, for somebody you want to see play in the system to ensure that the use of digital financial services are also carried to the doorsteps of everybody. So we are interested in what they do. However, we should also understand that for a regulator that is mandated to ensure sound financial system, anything the fintech does will be of interest. And if you can just quickly say, much as fintechs are good, very, very necessary, you also need to know that they are possible instruments for some violation of the law. Maybe we'll get there.
We'll get there. We'll get there. But so your friend, you're a stifler or you're indifferent?
I will tell you, we're not indifferent, we're not stifler, but we are enablers.
We're enablers.
And we use the law and regulation to actually enable fintech. Okay. And I hope I'll be permitted to say more on this.
Thank you, Mr. Alan. So next, Mr. Karawusa, please tell us, friend, stiflers, indifferent, what is sex mind towards the fintech? What's the mindset?
First, let me welcome everyone. My name is Reginald Karawusa. I'm the Executive Commissioner in charge of Legal and Enforcement at the SEC. What's the mindset of the SEC? The SEC is favorably disposed towards fintech because we see them as a very important stakeholder in driving financial inclusion. A survey that was done last year showed that average age of investors in Nigeria was 52 years. That was before the MTN IPO. So you have not many young people investing in the capital market because of the much paperwork that you have to go through. Young people want to be able to invest in a way that they don't waste time making their investment. So fintechs are going to be enablers in driving financial inclusion into the capital market. And the SEC has had a deliberate approach in engaging fintechs. As far back as in 2018, the SEC set up a fintech roadmap committee which was tasked to answer some key questions in the fintech ecosystem. One, what are the benefits of fintech to the capital market and indeed the financial markets? What are the barriers that fintechs face? What are the regulatory hurdles? Why is Nigeria not a fintech hub like China, Singapore, US, UK, and the EU? So that committee, and then also, why are startups in Nigeria not funded from within the country? But the major funders of fintech startups are offshore. So this committee answered a lot of questions concerning the fintech ecosystem and then made some recommendations. thereafter, we set up another committee, the Blockchain and Virtual Asset Committee, which also made some recommendations to the SEC. We have faithfully implemented those recommendations. So we are favorably disposed towards fintechs. I'll stop for now.
Thank you. Mr. Obiamelu, I know you are from the NFIU, so it's a bit different with you, I assume. But let's hear, what is your mindset towards fintech? Introduce yourself a bit more.
I'm Felix Obiamalo, the Associate Director, Legal and Sanctions of the NFIU. There's no doubt that fintech is an innovation that has sparked up activities within the financial system. They have brought an improvement to the financial sector. However, unlike Kofo and Regina, who are looking at it from the prudential point of view, our mandate at the NFIU is to ensure that the financial system is not used as an instrument to foster money laundering, terrorism financing, and proliferation financing. So speaking from where we are standing, I would rather say from where I'm sitting, I look at fintech more from the vulnerability, risks, and threats point of view. The advantages of fintech, within the advantages of fintech lies vulnerabilities. The ease of transactions, the convenience. One can move funds within 3 continents, sitting down in a sitting room within a minute. Those convenience and ease can also be used by criminals to launder money, layer, place and integrate them. So it can also be used to foster terrorism. Under money laundering, we are concerned with the origin of the fund. For terrorism financing, we are concerned with the objective the fund will be used into. Now, due to the complexity of fintech, both the origin and the use is not easily discernible. And when you look at the fact that there is no single regulator for fintech, it creates a signal to us is a red flag because it means it's complex. Those complexities makes for closer watch. And it's an evolving technology. It is still developing. All over the world, there is no single template for regulating fintech. So the regulators in Nigeria, the CBN, the SEC, we are left to devise in-house a means to monitor and ensure that it conforms to the laws and regulations of the land. Yes, our mindset is that this is a technology that has brought improvements to the financial system. However, as with all technologies, we need to understand it more. We need to allow it evolve and monitor it. But as Kofo said, we need not stifle it.
Okay, thank you so much. We'll get a bit more. Now, Mrs. Tell me, from an experience standpoint, what has it been? How have you felt towards the regulators?
And you can introduce yourself. Yes. Good afternoon, everyone. My name is Adedolapo Akinola, and I'm the head of legal at Kuda Microfinance Bank. I'm also the company secretary of the bank. What do I do there? I work with several departments in the company to ensure that our business and our operations are in compliance with applicable laws. We're talking about the products team, the tech team, the consumer experience team, the fraud teams, you know, a host of teams. I also am involved in the investment transactions of the group where, you know, I was involved in the Series A and the Series B rounds where we cumulatively acquired about $80 million. I also advised the group on its expansion plans, because the goal is to be the money app for all Africans. Prior to that, I was a senior associate at Kuda Microfinance Bank, where I worked for 7 years. Do I think that the regulators stifle startups? So I do not believe that regulators stifle startups. I mean, I can't say that they are our friends, but I do not believe that they stifle startups. You know, when you understand the role of the regulators, which is to regulate and monitor the activities of these entities, and with the understanding that regulators have an obligation to protect customers and protect the economy as a whole. You know, you cannot say that it's stifling innovation. That said, I do acknowledge that there have been regulations and actions of the regulators in recent times, you know, that have given the perception in the market that regulators do not necessarily align with the innovative and progressive ideas of the startups. You know, I don't want to pick on those actions or those regulations, but we all know them. So I believe that better collaboration between the regulators and the startups, you know, an improved channel of communication between the regulators and the regulated, seeking the input of these regulated entities, you know, during the drafting stage, taking into account the business and the practicalities of these entities. I think that with that, you know, perception in the market can be tailored towards the positive line. So in summary, I do not believe that regulators stifle startups, but I do believe that there is some work to do.
Okay, thank you. So now let's go down. Let's now look at specifics. Let's look at the cryptocurrency space. So we know that SEC has issued guidelines for the provision of digital and virtual assets. Please tell us the distinction between the digital and virtual assets, how that works, and what you expect from existing cryptocurrency businesses. And this is for you, Mr. Karawusa from SEC.
Thank you so much. A regulation that the SEC issued in May is not a regulation that deals only with cryptocurrency exchange. I think there's so much interest in cryptocurrency exchange. The regulation deals with the whole value chain of the blockchain, right from the issuance of securities on the blockchain, the operators, the requirements that the operators of a digital asset offering platform have to fulfill, how you custody those assets, so that's digital asset custodians, what do you call them? Virtual asset service providers, as well as the digital asset exchanges, which is akin to the cryptocurrency. So the regulation covers the whole gamut. We have seen initial coin offerings that have taken place in Nigeria. SureRemit launched its initial coin offering and raised $7 million here. Likewise, Kuda Network, $12 million. And in our interaction with folks in the blockchain industry, they say that about 48% of activities in that space are exchanges. So that's why this regulation is very important, but it covers the whole gamut. Now, I should also say that in making this regulation on digital assets, we touched base with the central bank in designing the framework. So we've been engaging. Now, as to whether, because of passage of this regulation, digital cryptocurrency exchanges should just go ahead and operate. That should not be the case. The regulation requires them to meet certain conditions. If those conditions are not made, the registration conditions are not made, then no exchange should operate. So the space has categories. You have cryptocurrency exchanges, and then you have exchanges that deal on other digital assets, like tokenization assets. So the operators in that space must first meet the conditions for registration before they can operate.
Thank you. Thank you. Mr. Alada, I'm sure you know that I'm coming to you next as a representative of the Central Bank of Nigeria. So SEC has issued guidelines for virtual assets, digital assets, which include cryptocurrency. But we are aware that the CBN at some point banned cryptocurrency. So how does it fit in? What is, please advise us, tell us how CBN and SEC, how it fits in, what's happening with CBN on that, in that space.
Actually, I was to start my intervention with a different thing, but the word banned actually jumped at me. Central Bank of Nigeria never banned cryptocurrency. And I think from Mr. Karawa's Regina's intervention, it was obvious what cryptocurrency is. And coincidentally, sometimes in 2016, I happened to do a paper on cryptocurrency, the legal scenario in Nigeria, in discussion with some judicial officers. And what we advocated then is what SEC is now doing. And that is, cryptocurrency is never a legal tender currency. It could be, for some people, a medium of exchange, just like Manila, cowrie shells, and the rest of them were, media of exchanges in those days. But that it should be dealt with more as assets. And thankfully, now it's seen as a digital asset by the authority. And that was the authority that we recommended that they, under their standing law, regulate cryptocurrencies in Nigeria. The central bank does not regulate cryptocurrency because it is not within its scope. We regulate who we regulate. And we can actually regulate how they operate. We only regulate how banks and other financial institutions operate. We can say, we see this as a death threat, as standing a death knell for you if you do X, Y, Z. You understand? Given the opacity of cryptocurrency, given the what would give Felix, Mr. Babalu, a lot of sleepless nights is the fact that the anonymity surrounding cryptocurrency, the fact that it could be used for money laundering and other offenses, the fact that it is used on the dark web, these are really, really flashpoints for any regulator. And I believe SEC is already standing up to it. For our information, Central Bank only warned that way back since 2017, we advised banks, these are the dangers that trading in this portend for your balance sheet. The chickens have come home to roost. The Central Bank of Nigeria is in good company. After we took our steps, we were aware that other countries central bank actually follow suit to warn the financial system against cryptocurrency. So CBN never banned cryptocurrency. Coming back to the regulation of SEC, as Regina said, we work together and we'll continue to work together on this. And Central Bank will have a certain role to play when you want to actually trade in that space. Well, you may want to ask yourself, what is the essence of an exchange? if he cannot open an account. You want to ask that question. That is a question for another day. But Central Bank of Nigeria will continue in pursuance of its mandate under the law to ensure sound, safe, and stable financial system in Nigeria. Take steps that will protect your interest, your deposit in the bank, and the audience interest in the bank. That is what we do, and we shall continue to do. So to watch out for your interest. Thank you.
Thank you so much. Well, can I just ask another question, just a quick one. So when fintechs are licensed, they receive licenses from SEC in that regard, are they going to be able to put the money in the bank regulated by CBN?
Well, I'll answer that question if you're talking of fintechs. It
It
depends on what you are trading in. It depends on what you are trading in. You understand? So, if what you are trading in, I want to ask a question. There could be a fintech for. But
more specifically.
If one of us, I'm just drawing an analogy. If, for example, that trader in pharmaceuticals decides to now add a tiny bit of heroin and cocaine, the regulator will not sit back and say, I'll give you licensing to do X, Y, Z. You understand? It may not be the sound analogy, but I can tell you that central bank will take the necessary steps to protect the financial system from collapse. Okay, quick one. We saw the volatility that Bitcoin, the most popular cryptocurrency, that was exposed to recently. Then again, if you must know also, I know Felix will be aware of some of this. There are so many of the Nigerian exchanges that are nowhere to be found today. There are so many investors whose money disappeared because they invested in cryptocurrency exchanges. So these are some of the things. And my people will always say, when we tell a child not to move so far, say the mother doesn't like it until he gets his hand burned. So do not get your hand burned. That's what Central Bank is saying.
Okay, thank you.
Remember also, cryptocurrency is not the only digital asset.
Okay, thank you, Mr. Alado. Thank you. So, I'll move to you, Adedolapo. So we've heard from fellows that the concern with fintech is that sometimes it could be an open door for fraudulent activities and also. So what have you put in place in Kuda to protect against that?
All right. I should mention that just like other regulated entities in the financial services space, fintechs have regulatory obligations placed on them. I'm talking about KYC checks, anti-money laundering compliance, transactions monitoring and reporting obligations, just to name a few. So, we all know that money laundering is a systemic issue and it's being tackled globally. So, while fintechs can be used as a conduit for perpetrating money laundering, so can other regulated entities in the financial services space. So that said, at Kuda, we have set up a team of experts in fraud and anti-money laundering monitoring. Our KYC processes are technology driven. We have partnered with some of the best data and address verification software providers. We also carry out AML trainings for all our staff, and we push out campaigns to our customers, clarifying our position on these issues and stating our zero tolerance policy in respect of all criminal activities, including money laundering. In the event that incidents occur where such criminal activities take place within our system, we work closely with the regulators and the law enforcement agencies, and we provide dependable assistance to ensure that all documents and information that are requested of us are provided in order to facilitate the investigations. What I'm trying to say is that while we are doing all this, not just because it is we have the obligation to do so by law, but we do it because it goes down to our ethos as a growing financial services provider. So we put all these things in place to make it clear that, one, we have an airtight system to prevent money laundering, and two, we fight against it and we communicate that expressly, and then we work with the regulators to tackle it as well.
Thank you. Felix, now have you had practical experiences with fintechs? Have you had practical experiences where the fintechs have been open to money laundering, fraudulent activities? And what is your advice to the fintechs to protect against this?
When these kind of issues are raised, first thing that comes to mind is the vulnerabilities that are fallouts of the convenience. Now, fintech transactions are convenient. There's an almost lack of personal relationship in transactions under fintech. Most transactions in fintech are machine to machine, so to say. So there is a lowered customer identification. Most often, you don't know who is transacting. And also, the fact that transactions are also multi-jurisdictional and in cash. For instance, you can fund an account in Nigeria and the withdrawal will be done in United Kingdom, for instance, in cash. There will be no trade because it's a cash transaction. These things are vulnerabilities. It gives us concern. And also, considering the fact of the volume of transactions that take place under the fintech, and then the rise in incidents of cyber crimes. You agree with me that cyber infrastructures are expensive. So with the level of our technological development, we've not reached them infrastructure-wise to be able to protect and safeguard most of these transactions. That's why you keep on hearing cases of some of these hacks. And then, for us, we discovered that most of the major cases of terrorism financing we had were from fintech-related transactions and not the traditional banking transactions. Because in the traditional banking transactions, it's easier to identify your customer. The KYC principles are taken very serious. And also, the FATF in recommendation 15 talks heavily about new technologies. Now, it is this new technology principle in recommendation 15 that is replicated in section 13 of the MLPA that financial institutions and other financial should conduct enhanced customer due diligence, even in the process of transaction. That you can do with the traditional banking, but you can't with fintech because transaction takes a second to be consummated. And then there are issue of suspicious activity report. Most of the reports that you render under suspicious activity report are actually your reading of the body language of the customer. In fintech, you may not see a customer, you see a transaction. So as far as we are concerned, these are red flags that makes us open our searchlights upon the fintech much more than we do over the traditional banks. And from advice, yes, I will advise the fintech companies to always look at the laws before they bring out new products, because it's very important that the products are in alignment with the law. And secondly, also, record keeping. They should strive to keep records as much so that they can leave record trails. And then also, the issue of segmentation of transactions. Most often, transactions that are commenced in Nigeria ends up consummated in another jurisdiction. They do not have what the traditional financial institutions have as being a bit careful over transactions from certain jurisdictions. The fintechs just do transactions because, to be fair to them, you might not even know the jurisdiction because it operates anonymously. The anonymity gives criminals the attraction towards fintech.
Okay.
So,
okay. I'll still like to come back to you, but because I think what I would like to hear is what is the way forward? Because what I'm hearing now is that a lot of red flags are coming from the fintechs, and the question is, how can you collaborate with them to ensure they can achieve their goals whilst they avoid these issues? Like how can the NFIU work hand in hand with the fintech so that they don't see you as the police and you're just watching them and almost stifling them, scaring them? Are there things you're putting in place? But you know what? I'll come back. I'll let you answer that after a bit later so you can think. Reginald, let's go to the Sandbox. I know you have a Sandbox, Sandbox incubation. How's that going? Have you started admitting fintechs into the Sandbox?
Not yet. But the way the Sandbox is designed is that the fintech, that once its product assessed, would go to the SEC's website, the page on FinPort, and fill the fintech assessment form. And then the fintech will get an acknowledgement of submission. And the SEC will then review that application to see whether the innovation which the fintech is bringing into the Sandbox is one that is covered by existing regulatory framework. If there's an existing regulatory framework, then the fintech will be guided on the next step. If it's an innovation that there's no framework in existence now, the fintech will be required to complete and submit the form for regulatory incubation. Once it does that, the form will be reviewed, and then if the fintech is accepted into the program, it will be notified and it will be told the terms and conditions for entry into that regulatory incubation program, and when they will begin the program. And if they are rejected, they will be communicated the reason for the rejection. So once a firm is accepted into the regulatory incubation program, there will be a continuous, when the program kicks off, there will be continuous assessment. The regulatory incubation supervisor will monitor innovation and make quarterly report to the SEC. And within 10 months of being in that program, we'll see what regulatory framework can develop for that innovation which yet does not have an existing framework. So within 10 months, they will know. But those who are admitted into the program can be there for 12 months. And at the end of that period, they meet all the requirements, then they will be registered. If they don't, then the program will be terminated and they will not be registered, they will stop activities. So that's how that framework is designed, but it's not fully taken on.
Okay, thank you. So just to give our audience a little background, so what a Sandbox is a program where regulators would let fintechs operate without licenses. If I'm right, please correct me if I'm not. So it will allow them operate without a license, and the regulators will watch them so they can develop tailored licenses for them. And after the Sandbox, so CBN has the Sandbox, SEC has the Sandbox. So COFO, I would like to understand, I know CBN has its own Sandbox. So when you have admitted fintechs into your Sandbox, you've watched them without license, they've operated for a certain period of time, what happens next? What's the benefit of being in that Sandbox?
Yeah, thank you very much for trying to put a meaning to regulatory sandbox. The audience is audience of lawyers, and well, I believe this session is actually to get people interested in fintech and regulation. Regulatory sandbox, as you have said, is not more of permitting people to operate, because if you operate without license, that would be illegal. What regulatory sandbox permits you to do is to come into the incubation area, develop your products, within the extant regulation. But if there is a lot of upside, discovered during the development of your product, that is not covered by extant regulations, the regulation can be tweaked to actually permit the operation of to give life and value to your product. And let me just say also that the introduction of regulatory sandbox is actually another way of the regulators being a friend of the fintechs and innovators. So for us, yes, the guidelines came out, since 2021, but the central bank is yet to actually admit people into the sandbox, but the plans are at advanced stage for this to commence as soon as possible, and you will continue to hear from us. But it's going to operate like what Regina just described now. But permit us to actually mention the advantages of the sandbox. It is expected to actually shorten the time to market, for development of your time on the development of a product that may not be approved, because you are going to work with regulators in the development of your product, and there is no limitation placed on you in this development. You have to work with them, and again, there will be NDA signed with everybody that's involved, so that your patent, your copyright will not be infringed in any way, or your trade secrets will not be taken away from you. So every step will be taken to mitigate your risk. Then permit me to just intervene. You asked the question of Felix a while ago about what the regulator, I will speak for regulators now, doing about risks that most of these things protect. You are aware that central bank has issued quite a number of regulations on cyber risk, for the banks, and that of other financial institutions where fintechs are captured has also been introduced. And happily enough, quite a number of law firms are already discussing these regulations on cyber risk. Risk management is a key thing, and the bank, the Central Bank of Nigeria, works with risk officers, risk management officers of all institutions, both banks and other financial institutions. It's not something that we take lightly. So if you want to be interested in sound financial system, we also want to see what risks are there and what mitigants the regulator can work with operators and provide.
Thank you, Kofo. But I still would like to go back to the sandbox. So when a fintech has successfully gone through the CBN sandbox, if that fintech has an overlap, when there's a regulatory overlap on that fintech with SEC, how is it going to work? When you issue a license to that fintech, is that license going to be fine for SEC, or is that fintech going to have the SEC regulatory sandbox?
Well, where I come from, they said, before corn was discovered, the chicken used to eat something. And let me say that before now, we've always collaborated with SEC. And Section 43 of the CBN Act created a body known as Financial Services Regulatory Coordinating Committee. CBN 1, SEC next in the order in that section. So we've always worked together. And my anecdote was actually about the way banks always operate. Merchant banks have the license of central bank, and they also operate as what? Issuing houses, and they will hold the license of central bank banking license, and they also hold issuing house license of SEC. The same thing will happen with fintechs. So if you are such a fintech that you are in the payment sphere, and you are other financial institutions as defined under BOFIA, you will hold central bank license, but this is not what our be-it-all license. Where you have to do anything with securities, so you have to also take license of SEC, and we coordinate this very, very well. And a good thing also happened under the BOFIA. There's now a provision in section 64 of BOFIA that allows, coordinated, supervision, consolidated supervision, of services. There are scenarios where you have financial holding company up there, and this financial holdco will have a bank or an insurance company, will have a securities company, will have so many others. So for us sitting at top there, so the financial holdco is now defined as other financial institutions under the BOFIA. So CBN has an overview of all this, but we work with other regulators. We're permitted to work with other regulators in a coordinated manner to ensure that nothing is missing, and regulatory arbitrage is never allowed within the system.
Okay, thank you. I know that more digital banks have had to use traditional licenses to function. Most of the digital banks are using microfinance bank license. I want to assume that's what's happening with Kuda. How has that been? Is it sufficient? Is it good enough?
So it's not, it is not. So we all know what microfinance banking license permits us to do. If you look at the regulations, you have your permissible activities, you have your prohibited activities, and then you have that interesting line that tells you that all activities not expressly permitted are prohibited, right? So the microfinance banking license is quite limiting. You can't do in FX, you can't carry out transactions outside the country. It's very limited in scope. So it's more like a temporary measure. It helps you provide some services, offer some products, but we have great minds, right? Innovation, people are thinking. And when they put forward a product, like was mentioned earlier, you have to look at the laws and confirm whether the product that you intend to offer, is within the scope of the existing laws. Unfortunately, we've had instances where we have been stuck with one of two options. Either we significantly modify the product that we intend to launch because the current microfinance banking regulations do not holistically support that product, or we do away with the idea. So, we definitely feel that we need something more. I don't know what it could be, a digital banking license, it could be something. This Sandbox is very good, it's forward thinking, there is hope. But we definitely need something more that would expand the scope of our operations, allow us to offer those products and those services that we intend to, without necessarily putting the pressure on us to get like a commercial banking license that would serve the purpose that we require. So also in getting those upgraded licenses like commercial banking licenses, there are cost implications to that, just for the capital requirements, the requirement to open different branches, all of that. So we know that the microfinance banking license is quite restrictive, and we definitely need something more.
Okay. Thank you, Dolapo. I would have said you should look towards that, Okay. So we're coming to this session, but so we're now going to talk from a future perspective. forward-looking. And I'm starting with you, Felix, as I had asked you, what are you thinking of doing to bring, rather than the watchdogs standing aside and watching them? They're innovating, they're doing things that we appreciate they're doing, but we know that there are red flags and you need to watch it. So what are you doing to then try and collaborate?
Rafa talked about the AML CFT training they had for their staff. We provide AML CFT trainings for the fintech. We're also collaborating with the Fintech Association in Nigeria. Last year, we took members of the Fintech Association to UK in December for an AML CFT retreat where we analyzed the trends, patterns, vulnerabilities and risks. And the Fintech Association is also part of the national risk assessment that we just conducted, because they are mandated to conduct risk assessment. But the NFIU coordinated the national risk assessment, of which the Fintech were brought in. Ordinarily, Fintech is a private sector driven initiative, but because we are all stakeholders in the financial system, and our interest is to protect the financial system, we brought them into our activities. We engage them, we continuously engage them. We have also issued advisories on fintech activities and the dangers and risks of virtual assets. Presently in the NFIU, we have a department, full-fledged unit that deals with matters relating to fintech and virtual assets. We also have a team in our compliance and examination unit that deals with them. Now, we are also part of the larger multi-agency team that is evolving and developing the best way to regulate the fintech in such a way that we do not stifle the companies and do not run them out of business, but mitigate the risks that will come to the financial system. And the NFIU are also presently collaborating with the FIU India and Luxembourg. These are the two countries that have done well-structured regulation of their fintech system. So we are collaborating with them, training-wise and also software development. So when they train our staff, we'll come back to train the fintech association. We're also using the chain analysis tool in analyzing our virtual assets transactions. Chain analysis and Pathfinder are the best tools in the world for that, and that's what we use. We are at the advanced stage in our discussion with the Cognites. Cognites are specialized tools for analyzing Bitcoin transactions. And in-house, we have also developed a software that detects virtual assets transactions. Because as Kofo said, banks were prohibited from transaction on cryptos. We are prohibited from the financial institutions. But we know that the transactions go on. So we have in-house developed a software that tracks those transactions. Otherwise, they will wreck the financial system. We are not doing this to run them out of business, but we are doing this to monitor them and ensure that we safeguard our own financial system and also enable the fintech companies to grow within the law. Thank you.
Thank you, sir. Future looking. I would like your final words before we throw it out to the audience for questions. One thing I'd like you to touch on is the fact that at this point there's the SEC rules, then many amendments have happened, and the startups sometimes have to comb through so many amendments here and there to find where they stand. In the future, is SEC thinking of one holistic legislation for fintechs or those in that space anyway, where you put it all together, all the various amendments? Also, are you also thinking of how you're going to work closer to TBN to simplify regulation of fintechs, or just simplify the experience for the fintechs?
I think we have to find a way, a midpoint between enabling innovation and making sure that the financial systems are stable. So we've chosen to make regulations to support, to grow fintechs and startups. One option is to ban activities that you don't understand, or you may not go far if you ban, because the activity will go on regardless. They will just go on and continue to carry on. When you make regulations, you bring them closer so that you are able to see what they do. We chose the policy of engaging. That is why we have had two committees, the Fintech Roadmap Committee and the Blockchain and Virtual Asset Committee. And we got useful advice from players in the sector, so that we can be able to understand and make proper regulation. So since those committees finalize their work, we have churned out a number of regulations that impact on the businesses of fintechs. We have regulation on robo-advisory, digital stock brokerage. The recent one is the digital financial assets. We have regulations on crowdfunding. So all these regulations are to enable fintechs to understand how they should operate. And then once we launch the regulatory incubation hub, we onboard them and help them to scale. Our ultimate goal is for today's fintechs that are startups to become big enough to be big techs, technology companies that can eventually be listed on any of our securities exchanges. So this is our goal, our aspirations for the startups in Nigeria.
Thank you. And do you think you're going to combine those legislations, the rules and the robo-advisory and the rest, into one document at some point?
It's deliberate to separate them so that people can know exactly what requirements for particular fintech activity that you want to play. So we have separate regulations for different functions that fintechs engage in.
Okay, thank you. I'll go to Kofo and then come back to Dolafo. And I'm just going to get you to advise other startups, because I know Kuda has raised several times. You can provide general advice on that. So, Dolafo had talked about perhaps in the future there could be a digital banking license and more tailored licenses. So, as you give your final words, we'd like to hear what the future holds, and also how to work closer with SEC. I think you have said that, so that simpler regulation is a bit more meaningful.
Well, let me just snatch from the way you present the question to Regina, and just tell you that, tell the audience that the future is rosy for fintechs who are ready to play here, and the future is rosy because they have a regulator or regulators that actually are interested in them and in what they do. And that's the essence of development of the sandbox, regulatory sandbox. So from now on, as soon as the sandboxes take off, so have them coming in there to operate, develop their issues and all that. And they will continue to work with regulators to actually develop guidelines that will regulate them. So that way it will be easier. Then let's also mention that regulators actually put out guidelines out there, draft guidelines out there for what IMF will call fair and comment. You read it and comment thereon. Present your concerns to the regulators, and regulators will actually take on board all this concern and see how they can tweak the regulation to make it easier for compliance. And that is why Central Bank, for example, is involved in what we call regulatory pragmatism. You know, it is not just the advanced status pupil arrangements. So, you know, the future is to ensure that we're more pragmatic in regulation and all that. Then I decided to go through that route because the answer to the main question is actually simple. And if lawyers in the house, I would say all of us are lawyers. If you look at the provision of section 131 of the BOFIA, that is the interpretation section, you will see that banking has been defined in a very, very different and modern manner. You know, and the definition of banking business is today has now recognized, you know, banking in any form. You know, that says banking includes all the gamut of taking deposits, you know, creation of credit and rest of them. Now says that whether such business is carried out as in an electronic or digital manner only or not. So that is a regulation of the fact that there is a future for digital bank. And that is why we keep talking about this regulatory sandbox. These are some of the things we'll be expecting, you know, for people, potential investors to come in there and let us see what they want to do, how they want to operate, you know, in that particular sphere. So the law today actually permits digital banking. So just for you to pick up the license if you meet all the requirements. You know, and as we mentioned earlier on, so just like in the case of brick and mortar banks, you know, the digital banks also, the relationship between us and between Central Bank and SEC will also be the same as between brick and mortar banks in Nigeria. So permit me to also say that I can see in the room, you know, maybe online audience, you know, that people who are interested in this are the younger generation of lawyers. You know, we want to advise that even the older generation, it's not too late for you to pick up something and learn about blockchain, for you to learn about digital banking, digital regulations, smart contracts, and the rest of them, because that is the future.
Thank you. And Dolapo, over to you. And the question is, in your final words, advice to startups who would like to raise funds, how to attract investment.
Before I advise startups, I just want to say one or two quick ones, you know, to our regulators. You know, we definitely see what is being done in the market. We see the work that is going into development of regulations, you know, to suit fintechs. I think that one thing that we all need to develop is the communication channel between the fintechs and the regulators. I think that if you build on this relationship, build on this communication channel, you know, there'll be, I feel like there'll be more comfort and then there'll be more progression in the market. So there are several times where fintech want clarification of regulation, and you know, there's this fear that comes with going to the regulators because you feel that the regulators are going to shut down your idea, you know, from the beginning. So we always tend to go to the external legal counsel to seek clarification from the regulators, quote unquote, on a no-name basis, right? So I feel like if regulators and fintechs can come together and just build the line of communication, there will be a shift in the perception of the market. So that's that. Advising startups. So I have a general advice and I have two specific ones. So, you know, investors would like to see a startup that has its books in order and it's a well-run entity. So, you know, an investor would want to carry out a due diligence exercise of you before, you know, they even think that you're worthy for their investment. So you want to have your corporate documents in place. You know, you want to confirm that your regulatory compliance is in order, even your tax position, insurance, employment, you know, requirements, those sort of things. We all know those. You know, we look out for them in in our due diligence exercise. So that's general advice. Just make sure that if an investor comes to you and they ask for these documents, you're able to provide them and pass the check. But the specific advice that I would give, the first one is that we all know that startups don't necessarily have all these documents, right? They are still up and coming, they're still trying to develop their product. So what would I advise a startup to do? Have a business plan, have a clear mind on what you want to achieve, right? What products do you want to offer? What service do you want to render? Is it scalable? Is it achievable? How do you intend to execute it? What's your 5-year plan? An investor would want to know that you have these things in place. You have a direction and you are able to execute it, and it's also sustainable. So that business plan is going to be your selling point. The investor will need to buy into your dream, and once they're able to do that, once you are able to have them buy into your dream and you have that confidence, you will get the money, you will get your investment. The second one is, after you have gotten that investment, what do you need to do? I think that a very important thing that I learned on this job is that you need to build your relationship with your investors. So it's one thing to have their money, but you need to understand that they have expertise, right? They have the market knowledge. They've invested in several other companies, so they know how these things are done, they know how it works. If you don't have that relationship, you probably don't see your investors at board meetings, right? When you need their approval or something. But once you have that relationship, you can get added benefits from that relationship. And you'll be surprised that when it is time to seek future investments, your current investors will be the first to come. And they also have that relationship to introduce you to other investors of like minds that would share your vision. So those are my 3 things. First one, get your documents in order, have a well-run company. Second, have a business plan that is practical, sustainable, achievable, And then the third one, build your relationship with your investors.
Thank you, Thank you, everyone. So now we're open for questions.
Thank you very much. My name is Kuda from the Public Interest Law Partnership. I think one of the partners is here. So thank you for a very enlightening session. My question is posed to the regulators. It seems to me as if you currently work in silos. I know you collaborate in regulating a few issues like, in terms of virtual assets, for instance. Well, my question is there any effort being made to create like a one-stop shop where fintech companies can go to, where they, can meet the regulators as one body, so NFIU, CBN, SEC, or is there a hindrance to this being done? I think that's my big question. Thank you.
Thank you very much. My name is Kuda Microfinance Bank. I first want to commend the panel for very interesting submissions. But I have this fear as a lawyer. We are caught between the companies and the customers. Recently, we had issues bordering on investments. I want to use the word investments in quotes anyway. We had, especially in 2021, about 5 persons were declared wanted by the police for so-called Ponzi investment. At what point should the customers, our clients, be wary or warned about getting involved in matters like this? And what exactly has SEC especially been doing in recovering our money? They put these monies in banks. What is happening? That is the question.
All right, thank you. Let me just take one more.
Thank you very much. My name is Betty A. Umebule, Unity Bar Abuja. My question is this: the regulation and guidelines that you are talking about, Is it between the CBN and SEC, or does it extend to consumers? Why I ask this question is this: if I open my phone now, you will see messages, quick loan, cash loan, SMS loan, Z advance, and all these messages comes when they discover that in my account I have like 2,000 naira, 1,000 or 3,000. I observe that every time I have like 200,000 in the account, I don't get such messages. My worry is this: does it mean there is no regulation or guidance guiding them, or if the guidance or regulation does it equally give them access to my account? How do they get my details? There's another scenario. Maybe a relation of yours will collect loan from this quick cash, instant loan. And before you know it, maybe before you have to repay the loan before 3 p.m. tomorrow. Before 3 p.m. tomorrow, you were not aware of the loan, you were not aware of the transaction between them and the quick cash. What we hear, so person collected 20,000 naira from us. He was supposed to pay by 3 p.m. This is 2:50 p.m. He has not paid. By tomorrow, we are going to publish his name. He's a criminal, he's this and that. If there is regulation, how do they get the details? And does it mean that once they give the quick cash, quick loan, once they give the loan, they hack into the account of their borrowers to get all the details in his contacts? Thank you very much.
Thank you very much. So I will just read like 2 questions from the online platform.
Let them answer the ones here, and then we'll take the online.
Okay.
So, Kofo would like to take the ones on the question.
It will appear as if all 3 questions are actually across all the regulators, but let's start from the first question, which is about one-stop shop. I mentioned earlier on the kind of relationship between central bank and SEC, and it goes beyond these 2. There are other members of the FSRCC I mentioned earlier on, and our job is actually to come together, look at external regulation, ensure that no part of our operation, besides of your operation, operators' activity is left out without being regulated. So, and we must know that there is no single law that can take care of everything in that statute book. So this is a market that is evolving. New things will be happening. Some 20 years ago, are we talking about digital banking? No. But the regulators have reacted to that, and laws have been done this way now to ensure that it covers even longer time. So for the questioner, my short answer is that it will be difficult for you to have one-stop shop for financial services. For investment, yes, you have the NFIU and the rest of them if you want to carry out some of these things. So where you can have that. Then again, the websites of these regulators are a good resource for you. And like we said, you can never, in one fell swoop, take care of all the businesses that you want to engage in. I hope that answers part of it. Regina is here to say more. For Mr. Bible, we can also say that central bank, all the 3 of us up here, we work together on your concern, especially the EFCC. From time to time you see advertorial, coming out, from SEC or from central bank, warning the public against patronizing Ponzi schemes. If you're looking for a wolf, it will run your belly. And that is what is happening now. We can understand that it's because of the fact that you have some tough times around, and people are looking for get-quick avenues. That's why when anybody comes and says, oh, 40%, 100%, then people are there trying to invest. Even people who are more knowledgeable, who are very, very knowledgeable, that when you see that it is so good, it looks so good, then the risk is so high, and the chances of your being taken for a ride are very, very high. So we also want to plead with you as learned people to also advise our clients from time to time that please avoid some of this. When it's not clear, please meet the regulators, and you can always ask questions. I will tie this answer to what my sister from the Unity Bank has just mentioned. Straight up, I will say that most of these payday loans, what happens is that when you go there, they actually have access to your phone, because you are desperate, they invest all the telephone numbers on that phone, and that's why if we have a mutual friend who takes that loan, the message you get, I will get. I've gotten such messages before, and what I did was to get back to them, and ask them questions, and the fact that they dare not, and they should move away from that. I actually reported to the relevant desk in Central Bank to take action, and they did take action on some of them. But as for regulation, consumer protection regulation issued by Central Bank in December 2019, presently my humble self signed that regulation when I was heading consumer protection. We have what we call responsible business conduct regulation. We have disclosure and transparency. Under this we have data issue too. Your data is supposed to be handled delicately by your bankers. You understand? Again, it boils down to what we're discussing here. Today, blockchain, all of that things, they are so intelligent now that nobody is looking at your account. But there's a trigger somewhere when your deposit gets to a certain level. And I think that's why you get all those issues. So we have things about debt in that regulation. We have prescription and stipulation for responsible debt collection. We have prescribed what banks can and cannot do when they want to collect debt. So if you witness anything outside such regulation, and you complain to Consumer Protection Department or Central Bank of Nigeria, you definitely get help from there. So we always, encourage people to check into these areas. Go to the website of Central Bank. You have the Consumer Protection Regulation there, which was built on the Consumer Protection Framework issued far back as 2016, to protect you and keep you within the financial system. So we are always there to help you. I know Regina will want to add on to this.
Thank you. But I'm going to say we have to watch the time, so please add on.
Kufu has done justice. Just to add very little to what Kufu has said. You can't have one consolidated framework for all fintechs because the functions are different. For Ponzi